Demand for the US dollar picked up across the previous week, with the greenback rising against most of its majors. The rally in the dollar comes following upbeat US data, less dovish minutes from the FOMC, and mixed messages over a US-China Phase 1 trade deal. The US dollar index, which gauges the greenback strength against a basket of 6 currencies, surged to just below its high for the month on Friday. The dollar index ended at 98.27 on Friday, posting a 0.11% rise week on week. Mixed trade messages have kept the dollar range bound across the past few weeks. However, on Friday, both China and the US underscored their desire to sign a Phase 1 trade deal. Meanwhile, the British pound was beaten into retreat last week amid domestic and geopolitical uncertainties. The pound-to-dollar exchange rate stood at 1.2832 by the close of Friday's trading session. For the week, it posted a 0.3% loss. However, sterling currently retains an upside bias on the charts and could still reach its May 2019 high in the weeks ahead, according to technical analysts, although a narrowing Conservative Party lead in the opinion polls is a risk to the British currency. Meanwhile, the euro to US dollar exchange rate slipped lower in the latter part of the previous week. The pair experienced its largest decline of the week on Friday, when it slipped by 0.3% to close at 1.1024. For the week, the pair was unchanged. On Friday, new European Central Bank President Christine Lagarde gave her first official speech, in which she called for further fiscal stimulus. That offered some support to the euro. In the crypto market, there was a sharp decline in Bitcoin below the $8,000 mark against the US dollar. Bitcoin ended at $7,323 on Friday. For the week, it posted a 15.4% loss. This week is a holiday-shortened week in the US. However, there are still several high-impacting data points that investors will be watching in addition to any US-China trade talk developments. US consumer confidence on Tuesday and data surrounding Black Friday will be under the spotlight as it sheds light on the health of the US consumers. Durable goods, in addition to a second reading on the third quarter GDP, will also be closely watched. Meanwhile, in the commodities market, oil futures fell on Friday after settling at a 2-month high a day earlier. January Brent crude lost 58 cents to settle at $63.39 a barrel on Friday. The global benchmark saw a weekly gain of 0.1%. Meanwhile, WTI crude for January delivery fell by 81 cents to settle at $57.77 a barrel. The US benchmark ended 0.1% lower for the week. Baker Hughes on Friday reported a 5th consecutive weekly decline in the US oil rig count. The number of active US rigs drilling for oil fell by 3 to 671 this week. In the meantime, gold prices edged lower on Friday as the dollar strengthened, limiting demand for the yellow metal. Gold futures settled unchanged at $1,470.50 per ounce on Friday. For the week, it lost 0.6%. According to commodity strategists, stronger data in the US strengthens the interpretation that the Fed is going to stay on the pause. That means the dollar is likely to continue to move higher, which would constrain gold. You've watched Combined Financial Review on InstaTV with me, Anna Kasatkina. Stay tuned.